Hello. Hello. Hello there, and welcome to the week ahead with me, Fiona Cincotta, Senior Market Analyst at City Index. And we'll be looking at the week coming, which is beginning the 14th of October, if you can believe we're there already. I certainly can't. So just before we get going, I'm just going to ask you, as always, to take a moment to read through the risk warning. I'm just going to put myself on mute whilst you can do that. Okay, excellent. Thank you very much for doing that. So let's just jump on, as we always do, with let's just have a look here, the financial calendar. This is the economic calendar from City Index, and I've filtered it for next week and also for the high impacting events. But I think the first thing to just mention, actually, before we look at the actual economic calendar, is over the weekend there is going to be very much a focus on China, with expectations that China will unveil another further 283 billion in fresh stimulus measures. So this will be on Saturday. We have the Finance Minister Lan, who will be giving a press conference and is expected to introduce the measures which to strengthen policy and shore up the world's second largest economy, whilst also boosting confidence. So, I mean, if we just think about what's been going on with China in recent weeks, obviously we had we had the first round of, or several rounds of stimulus measures and announcements across a week just prior to the Golden Week. Then we had Golden Week, whereby the markets were shut. And then we had a return. And on that return from Golden Week, we actually saw quite a sharp sell-off. Here we go. In the Hang Seng and in China stocks as well. And that was basically just as the market was reassessing and just thinking over the stimulus package, and was a little bit disappointed actually that there weren't further announcements made. So what we're seeing now is that China is stepping up again, looking to announce fresh stimulus, and the hope being that that will be sufficient, or at least help support the view that China is willing to go the full way to supporting economic growth back to levels seen back to that 5% target that we're aiming for. Now, in addition to the announcement over the weekend, also keep in mind that we have several China data releases as well. Just having a look here, you've got consumer price index, so inflation is to be released on Sunday. That's to come in a little bit weaker, a little bit stronger, but still very weak at 0.7, highlighting that sort of weak demand environment. And then we've also got, it's not on here, but on Tuesday we have trade data from China, and then we also have at the end of the week retail sales, industrial production, and GDP figures. Now, I think what's just important to note here is obviously these figures all relate to China pre-stimulus, not that the stimulus has taken effect yet, but so I think, you know, what these figures could still be weak, and I just wonder whether the market will be able to look past some weakness in the figures. Obviously, if they're very much weaker, then that could still unnerve the market and could make sort of, you know, push expectations for additional stimulus. Interestingly, there has been some comments regarding the Chinese stimulus that had been announced to date, and the analysis was that it was good for Wall Street but not for Main Street. And I thought that was quite interesting, and that's mainly what we've seen being reflected in the stock market. We saw that massive rally on the announcement, but actually, you know, when the dust settles a little bit, the market was actually, oh, actually, is that going to be enough in order to keep this or to lift the Chinese economy? So, I mean, just as far as levels are concerned here, I mean, this is really quite interesting. This is obviously the daily chart, spiked higher above the 2023 high up to this level here, which is the 23,500. But obviously that was short-lived, and the price quickly came back below the 2023 high, which is at that 22,700 level. Found support exactly where we would have expected it to find support, which is around that 20,300 level, 300, 400 level. That's a level that was important in July 2023, also May 2023, and well, not quite, but almost in June as well. So that was a level that we've been watching out for. Now the price has recovered, it's moved higher. Obviously we're seeing, you know, that long lower a candle on the Hang Seng chart there suggests that there was little selling demand at those lower levels. We've seen the price pick up, but it hasn't really managed to sustain any strong move higher, and the market's just waiting, I think, to find out a little bit more about the stimulus announcements this weekend. Now, as far as levels to be watching are concerned, this on the downside, if we get any disappointment as far as the stimulus at the weekend is concerned, then I would be watching for a takeout of this level here, which was that 2023 high that we saw around the 20,300 to 400 level. Below here, we've got the previous 2024 high, that was the May high, that could come into focus. It's around the 20,000 psychological level, and then below that really there isn't too much to be looking at until we get down to the 18,500 sides. But on the upside, if we get encouraging, if the market's impressed with what China has to say, and if the data that we're seeing coming in from China next week isn't as weak as expected, then we could see a test of 22,000 round number ahead of the 22,700, which was that high that we were talking about before, bringing 23,600, which is the 2024 high, back into focus. Let's just have a look what's been going on in China as well. Right, so I mean, it's not all that different. We've seen the strong rally. Just bear with me whilst I change the colorings on this a little bit. Where's that one go to? Right back here, we can see it. Okay, so we see we had this rally off here from this falling trend line. I'm just going to ping up the weekly chart because it just makes it a little bit neater to see that this is the weekly chart that we'll be looking at here. We can see this falling trend line that was dating back to May 2021. The price powered off of that rose higher, rising to a peak here of 16,300-ish. Long upper wick there. We've seen it come down quite significantly since then, back below the 200 SMA on the weekly chart. So it'll be interesting to see where that price closes, whether it manages to close above that's the 14,000 level for the week. That's what we'll be watching out for. So let's just have a look. This is the daily chart, and yeah, so you know, we're just testing this 1350 at the moment. That's the 13,500. Price is below the 1400 round number. This is the one we'll be looking out for. Disappointing announcements, watch out for on the downside, a break below there, and that's going to bring the 13,000 level, which was the May high, into focus. On the upside, this level here, 14, so we've got the 14,000, that's the 200 SMA on the weekly, but then you've also got this one here, which is the 2023 high, which is at the around 14,200 to be watching on the upside. The other one to be watching, I always like with China, is obviously the Aussie dollar. Let's just space this out a little bit so we can see what's going on here. That's actually fallen again from, so we had that rally. Obviously this has got some US influence going on here as well. We had a rise up into that high, which was at the 69.50 level. We've had a full rebound lower, broken below that near-term rising trend line as well, just testing the 50 SMA, which is at the lower end of this channel here. If we just go to the weekly, we can see what channel I'm talking about. Just fallen back into that descending channel, which dates all the way back to December 2020. So that's just something to be looking for. Now, I think before we go any further, it's a good idea just to have a quick look at what's going on with the US dollar, because obviously that does influence so much of what is happening. We've had obviously this tremendous rally in the US dollar. It's up 2% already across the October, so a very, very strong start to October. That was after it sort of rallied off or rebounded off that support level that we had here. Just as far as economic data is concerned next week, the US is actually really quiet. The only thing that we really have to be focused on as far as economic data is concerned is retail sales, which are expected to rise 0.3% month on month, up from 0.2%. Now, this is going to be interesting with retail sales, because if we get a nice solid retail sales reading, then that's sort of going to support this view that the US economy is on this Goldilocks trajectory, whereby, you know, we're seeing inflation is cooling and the economy remains resilient. Let's not forget, this week we've had US inflation data, which came in a little bit hotter than expected at 2.4% year on year, but down from 2.5% previously. And core inflation just ticked higher at 3.3%, down from up from 3.2%. What's interesting here is that we're seeing the slight tick higher in inflation. We've seen obviously that immense jobs data the other week, which was much stronger than expected, which is expected to help support retail sales. Obviously, if you've got, you know, a strong jobs report, and you've also got inflation is cooling, as I said, and interest rates coming down, and that supports domestic consumption. So for now, we're sort of seeing that Goldilocks scenario, which I think actually, I mean, it does support the US dollar around these levels. It does mean that the US isn't really, you know, is heading for a soft landing. That's what it looks like it's happening. We're expecting the Federal Reserve to cut rates, but there's no need for bumper rate cuts. The market is pricing in 25 basis point rate cut, around an 85% probability and a 15% probability that the Fed won't do anything in in November, which is quite interesting. If we get very weak data, I don't think retail sales is actually one that's going to massively unnerve the market, to be fair, because they do tend to be quite volatile. But so just as far as levels are concerned, the next one on the way up is this one here, 103.73. That's what we're looking for, is 200 SMA. A rise above there could see bulls gain in traction. Just on the downside, I'll be watching this level here, which is the 101.80. That was the high that we saw in early September. In fact, it was the September high. So that can be support on the downside if we do get a break below there. I don't sort of really envisage this happening next week, but you know, you never know really. Then on the downside, then you've got the 100.65 level that we've been watching on the downside. So that is the US. Then the other thing to keep in mind is we've got earnings season. Yay, earnings season kicks off officially today with the banks. They haven't reported yet at the time that I am writing this, or we're doing this, but they're about to any second. And so next week, as far as earnings are concerned, I think the big one is going to be Netflix. We've still got Netflix, which is going to be reporting. They're expected to report strong Q3 results, basically surrounding expectations are for around 9.8 billion in revenue, and that's on EPS of 5.10. That's up from 8.5 billion and 3.73 in the same period last year. So a strong increase in revenue growth and in earnings, as we see the continued impact of the password crackdown, as well as price hikes, and this, continuation of this two-tier business model which it's implemented and which seems to be doing pretty well. So that's Netflix earnings. We've also got Netflix is trading around its all-time highs as well, I do believe. Let's just double check that actually, because maybe I didn't check out what it was doing in 2021, because sometimes that was in the Netflix. Having a moment, there we are. So here we go. I'm just going to double check that. Yeah, you see, I think that's its all-time high. Where's the 2021? Because that's obviously COVID. Once it's above that COVID level, there it was, 2021. Yeah, we're above the COVID level. So yeah, Netflix is trading at all-time highs ahead of that earnings. So that's one to be watching out for. But yeah, so as I said, so is the S&P 500, hit a fresh record high again this week. Also got earnings from Goldman Sachs, Bank of America, as well as Citigroup. Their results, along with the banks today, are going to be interesting, not only for watching those single stocks and the sector as a whole, but also just to get more of an understanding of how the banks can see the outlook for the US economy. And that's often gauged by looking at expectations for bad loan provisions. So what they set aside for their bad loans can give us a good idea as to how solid or not the banks are seeing the US economy and the likelihood of loans becoming bad and not being paid back. So that is so as far as the S&P 500 is concerned, I mean, it's not even overbought at the moment. We're seeing it sort of struggling around this area where it's been consolidating after a really lovely run upwards. It's trading above this trend line, which dates back to October 2023. Fresh all-time highs, we'll be looking at 58 and above 58, then you go towards 58.50 is the next logical side on the upside. On the downside, I think if we get a break below here, 56.65, that's what I'll be looking for on the downside. That's the October low. That'd create a lower low and bring this level in here at 55.55, which is a level that we saw back in August. It's also the level that we saw around here, the lows at the last week of August as well. So that's quite an important level to be watching on the downside. So just what else will we be watching? I think UK, sorry, just bear with me, there's also Japanese inflation, which is due to be released. It's not actually on that economic calendar because it's been highlighted as a medium rather than a high, but I think it's going to be interesting just to be having a look at the US dollar, Japanese yen anyway, with what's going on. Just as far as the inflation data is concerned, Japanese inflation is expected, well, it was at 3%. Headline inflation was at 3% previously in August. Core inflation is expected to dip lower to 2.3% year on year, down from 2.8%, which will be interesting. Cooling core inflation will take the heat off the Bank of Japan to hike interest rates further, and especially given that we've heard from the newly elected Prime Minister, who said that he didn't consider it was the right environment to hike interest rates further. Now, obviously, these comments have seen the market rein back Bank of Japan rate hike expectations over the recent week. Plus, at the same time, we've seen the Federal Reserve, we've seen the market rein in outsized Federal Reserve rate cut expectations, and even, you know, just lowering rate cut expectations in general. And that's helped this USD Japanese yen pick up of 139 and trend higher, risen above some pretty key levels here. You've got the 145 round number, you've got this level here, which was the high from early September, also the low from March. Ran into resistance at this level here, 149.30, 149.60. That was the high that we saw in mid-August. That's what the market needs to continue trending high. It's supported by the RSI over 50. This is a trend upwards. So, you know, next level we're going to be looking for is this zone here, which is basically the you've got the 150.80, which is the 50% fib level from the 162 swing high to the 139 low. Also, it's the 200 SMA just above there, and 150 is the round number. So I think, you know, this area here could be a pretty key resistance area. You've also got this rising trend line support, which goes all the way back to 2022. So so a lot of resistance to be overcome around those levels. On the downside, failure to get beyond any of those brings this level here, the 146.50 level, back into focus ahead of 145, which is also the 50 SMA. So, you know what, if we're getting, you know, stronger than expected Japanese inflation data, we get weak US retail sales, then maybe we could see a move lower in the pair. So just going back, oh, the ECB, how can we forget? My gosh, ECB interest rate decision, massive. Okay, ECB is expected to cut interest rates by 25 basis points. This will take the interest rate to 3.25. Basically, this is a move which has been broadly conveyed, I'd say, but with by policy makers, or several policy makers, in recent days and weeks, including ECB President Christine Lagarde. As we head into the meeting, inflation is down at 1.8% for the region, which is below the 2% target. We also know from the recent data from Germany, there are concerns over the outlook there. And the ECB minutes for last month showed that the market, or sorry, the policymakers are increasingly, or several policymakers are increasingly concerned with the outlook for growth in the region. So these do point to reasons why the ECB would look to cut interest rates again. The market is expecting the ECB to cut rates again in the December meeting by 25 basis points. And continue to cut rates heading into 2025 to bring them back towards the 2.5 to 2 level. So, I mean, that, given that the ECB could be able to act more aggressively than the Federal Reserve in cutting interest rates, given that economic weakness that we're seeing in the Eurozone and that inflation is below target level, then I think that does mean that there is pressure to the downside for euro US dollar. At the moment, we found support this week at 109, exactly where we were expecting to find it. Now I would look for an extension of a sell-off below that level towards the 200 SMA at 108.74, supported by the RSI below this level. If we get a break below there, then we could see sellers gain traction, so they move below the long-term trend line, the long-term 200 SMA, and that could open the door to lower losses towards the 108 level. If we do find that 109 holds, then on the upside, key level is 110. If we get above that, that sort of negates the move lower. And just have a quick look at the German DAX, see if we can get through everything on time. Just a very quick look at the DAX. It's just hovering still below that all-time high. We've seen it trade. It's trading, consolidating between the 19,000 and the 19,500 all-time high. It's still remaining above that rising trend line. So, you know, we do get signs of the ECB cutting rates further and not too concerned about the outlook for the economy, then that could help the DAX head much higher. Now, as far as the UK is concerned, we've got GDP and we've also got, we've got inflation data and jobs data from the UK. Inflation is expected to hover around the Bank of England's 2% target, after posting a small increase of 2.2 to 2.2% in August. Service sector inflation very much in focus, given that it remains elevated around the 5% level. Meanwhile, UK jobs data is expected to be released on Tuesday, and we're looking to see that employment remains low by historical standards, keeping wage growth elevated. Obviously, wage growth is intrinsically linked to service sector inflation, and signs of this cooling is what the Bank of England will be looking for. Now, Andrew Bailey last week said that the Bank of England could move faster to cut interest rates aggressively if inflation allowed it to do so. Now, obviously, those dovish comments sent the pound sharply lower. I think they were here. Here we go on that Thursday, 3rd of October. Sharp move lower. Still continuing to trend lower. Again, the 130 is the key level here. A break below here sees a lower low and also negates that uptrend that we have seen. Below here, the rising trend line at 128.90 comes into play, as well as the 200 SMA around the 127.80. On the upside, if we can get a move above 130.50, I believe is, so 131.50, that's this week's high, then that'll open the door to 132 and 132.60, which was the high that we saw in August. Other thing to keep in mind here is geopolitical tensions. Obviously, there is a lot going on in the Middle East. The market does remain concerned that there could still be a broadening out of the conflict in the Middle East, which would be bad news for oil supply. Oil's had a volatile week this week. It's set to actually rise around 1.3% across the week after gains of 9% last week. And this is basically on a combination of factors, but including the risk premium owing to the Middle East, but also because of the news and optimism surrounding stimulus in China, which is the largest importer in the world, and then also because we've got this resilience in the US economy, but the Fed is still expected to cut rates, which is beneficial for the oil demand environment in the US, which is the largest consumer of oil. So just as far as levels to be watching out, 77.50 on the upside. We've been extending this recovery from the low down at 67.50. It didn't manage to close above the 200 SMA, which is a little bit telling. So if we do see bulls look to push the rise higher, particularly if we get upbeat, if we're encouraged by the announcements from China over the weekend, then watch out for 77.50, the 200 SMA. That's what we want to be moving over in order to bring the 80 level into focus. On the downside, we've got support here, which is at the 72.50. This is on the downside. We've talked about this quite a lot, haven't we? 72.50, 71.50. Area, support area, which is what we'll be watching on the downside. And just last but definitely not least, let's talk about gold. Gold is eased from its all-time high. It's tested this rising trend line, which dates back to 2022 and pushing higher. Obviously, I mean, we've seen that US dollar strength, which is just played on gold, which has brought it lower over the past few weeks. Obviously, on those expectations that the Fed may not cut interest rates as quickly as initially expected, but we've still got the safe haven demand which is lifting gold prices as well. So just as far as levels to be watching, really, on the upside, you've got the all-time high there at 26.85. That's the level that buyers are going to be looking to rise above to bring potentially 27 and then 3,000 into focus. On the downside, I think just today's this weekly low, which is at the 2600 level, that's the one to be watching on the downside. If we can get below 2600, then at 25.34, you've got the rising trend line support and also the highs from August. So that is everything. I hope you've liked what you've seen, and I look forward to speaking to you next week. Thank you very much and have a great weekend.